everyone, it's Alex Suslov, Head of Capital Markets at A&D Mortgage, and Billy Abrams, CEO of ADM Securities, here with you for our weekly A&D Digest. Hi, Billy.
Hello, Alex. Hello, everyone. Hope everyone had a happy Easter holiday and a good long weekend. And now we go back to business.
Yeah, it was a great long weekend, Billy, definitely. I hope everyone is refreshed and ready to start a strong week. We had numerous economic events last week. We had retail sales, PPI numbers, yield curve started steepening. What do you think, Billy? Are we any close to highs, or we can see more sell-off in the months?
We found out last week. We found out that CPI was at extreme highs, but it was expected. PPI came in extremely high and much higher than expected. So the two numbers were both fairly market negative. Retail sales came in a little bit better than expected, but then they revised the previous retail sales up quite a bit. So all three were negative reports.
From 30 basis points to 80 basis points, which quite a lot, right?
So since retail sales came out and the markets had all held steady through CPI, PPI, and retail sales, yields began to rise again. And where we are now is the 2 years about where it was a week ago, the 5 years up about 7 or 8 basis points, the 10-year up about 10, and the 20-year up about 20. And my concern is that the flattening cycle of the yield curve may have ended. The reason I say that is the spreads between 30-year yields and 5-year yields, as well as the spreads between 10-year yields and 5-year yields, have actually widened more than at any time since March of 2021, which is when that spread crested. That was the highest the spreads reached since 2014. Now they're starting to creep back that way. My concern is if the yield curve actually made a cyclic low, which it's too early to say, then the long end will have a lot of trouble rallying if the short end can't get a good rally going. So there's a little bit of discomfort here, and the yield curve could become problematic. And by the way, a steeper yield curve is common when there's inflation. So we have to keep an eye on that.
And I saw mortgage spreads tighten a little bit with treasuries, which kind of kept rates flatter last week. So that is also good, right?
Yes, yes. I did see where mortgage rates hit 5% for the first time since something like 2011. Of course, in 2011, that was historically low, so just have to take things relative. So.
We see conventional rates approaching 5%. It's today at 4.75 to 4.8% average conventional rate on the market, and non-QM rates Billy today is at 6 to 5 on average for alternative income documentation and DSCR loans. If we take average scenarios, we keep working on improving our guidelines and making loans more affordable for our brokers and borrowers. So I want to remind everyone this month we are ending our interest-only promo, which lasts for the month of April, and we've launched improved jumbo pricing. We see an improvement in rates of about 3/8 or so. That makes the program more affordable, and we urge you guys to take a look at our jumbo product and see if any of your borrowers are maybe a good fit for that.
Okay, Alex. And next week, it looks like, or in the coming week, we have a very light economic calendar. I think we have housing starts and building permits and existing home sales, and not a whole lot more to look for on the calendar. So we'll just have to see what the market can do after the big news week going into a quiet news week.
That's perfect. Make sure you guys attend our webinars. On April 19, we'll have a cash out webinar talking about an opportunities to get a cash out on non-QM loans, and we'll be talking about good sales strategy for non-QM loans on April 26th, and May 3rd will be a webinar on our jumbo program and qualifications for borrowers.
As always, Alex, I look forward to seeing all those and learn as we go.
Billy, it was definitely a good week. Everyone should be refreshed after Easter holidays. We wish everyone to have great kickoff for this week. Once again, it was Billy and Alex with A&D Digest. Thank you, everyone.
Thank you, everybody.